Hi there, welcome to Nepi Invest. There are over 2,000 companies listed on the ASX, and I doubt there is one single investor out there who knows every single company. And in today's video, I'll be featuring a company that I didn't know existed until recently. And that company is called Gimli Group of Companies. On the ASX, it's actually called GLG Corporation with a T code GLE. This company is based out of Malaysia or Singapore, and Gim is Malay, if I remember correctly, and the English translation for Gim is actually Pin, which sort of makes sense because this company is a manufacturer of clothing. So let's get stuck into looking at Gimli Group of Companies and talk about why this came upon my radar recently. I am not a current shareholder of this company, and probably more than likely I won't be a shareholder of this company for a few reasons, which I will discuss. But one of the whole reasons I am doing this channel is to share ideas. And this is one of those companies that not many Australian investors would know about. There are a few reasons that this company is not that favored among Australian investors. For instance, it's not Australian based, it's based in either Singapore or Malaysia. Clothing manufacturing is not the sort of company you do see listed on the ASX either. It's also fairly small and highly illiquid. I've already given away that Gimli is a clothing manufacturer company. In fact, they sell most of their clothing to major US retailers. In fact, the majority of the revenue is from the United States. Some of the revenue is also in Canada. Then also, not only do they manufacture clothing, they're also into product design and styling and a few other things as well. But mainly, they are selling clothes to US retailers. Within Southeast Asia, Gimli has quite a few countries within its network, including Cambodia, Korea, Malaysia, Singapore, and Indonesia. They manufacture clothing in Cambodia. Their hub is actually in Singapore, and that's been, or their main office is in Singapore, and that's been the main office since 1977. Now, for instance, in Cambodia, they do have a mill. Is that what you call the factory where they manufacture clothing? I actually don't know. Anyway, that's one of those mills was established in 2017, has 2,200 plus employees, 46 sewing lines, and it has a capacity of manufacturing almost or just above 1 million units per month. The CEO of Gimli is Felicia Gan Biling. She's been with this company since 2006 and joined the board on the 15th September 2015. So one of the good things about this company probably would be the management, fairly stable management. And when I say fairly, I mean really stable. With the CEO being within this company for over 15 years, that actually is quite comforting. And that probably means this company is more legitimate than some other Southeast Asian, well, maybe not Southeast Asian, but about 5, 6, maybe even 7 years ago, we had a flurry of Chinese-based companies that listed on the ASX, and I don't think one single one of those Chinese-based companies remain on the ASX because, I don't want to say it, but the majority of those Chinese-based companies had a lot to be desired in terms of legitimacy. So I don't think you could question Gimli's legitimacy based off the management and based off one other thing, which I'll touch upon later in the video. And another thing that should fill us with confidence, particularly those shareholders who have taken a position in this company, is that the founder of Gimli, Estina Ang Soon Hong, and she founded this company around about 1974 or 75. She is still in this company as the chairman. So there is skin in the game here in terms of someone who built this company from scratch. And when I say from scratch, she started this company with 6 sewing machines. So she has an vested interest in this company to keep it going, to keep it growing also in the future. Now, in saying all that, I probably would not classify Gimli as a high quality company. It's definitely a lower quality company, not only in terms of what they do, clothing manufacturing, not a lot of margins within that area, but also because of the markup, the really low markup, and also the liquidity of shares being traded on the ASX. So the majority of fund managers, if not every single fund manager on the ASX, probably has maybe had a very, very quick look at this company, and because of liquidity, they won't delve any deeper. So there are a few issues when it comes to this company, but there's also some things to like when it comes to Gimli, and we'll talk about those things to like and some of the things not to like about this company during the rest of the video. Now onto their financial year 22 results. Now we'll start with the share price. Now I set up this video about a month ago, and it's taken me about a month to record the video. 1 month ago, the share price was 51 cents. In one day, the share price fell from 51 cents to about 33 or 34 cents on no news, and not many shares traded. And the reason was, it seems like maybe one person decided they needed to sell their shares to buy a yacht or something like that. Maybe not that big, but to buy something. And because they wanted to sell the shares on market, the share price dropped about 30%. And that's the problem with these sort of companies. When they're highly liquid, all it takes is one person just needing to sell the shares, and it can see the share price plummet about 30%. But that does open opportunities to buy these companies at cheaper prices or lower valuations if you are, what's a press word to say, if you are confident about the future of their business. But at a share price of 34 cents, the market cap of this company is only $25 million, which does seem low when the profit for this company in financial year 22 was $7.4 million, which means the PE ratio of this company is just above 3. They also produced $284 million of revenue. Now, I'm not going to really talk about the operating cash flow and free cash flow negative in financial year 22, and I'll discuss why we should ignore that later in the video. One thing I look at for all companies, no matter what company it is the revenue growth. Now, research has shown that revenue growth is the best predictor for a company's valuation or share price to outperform the market. So we want to invest in companies that have the ability to grow their revenue over time. And Gimli is not quite on that boat. Now, revenue, if you do include financial year 22, has grown over the past 10 years at 1.2% per year. But if we take away the financial year 22 revenue of $284 million, it does look like revenue is flat over the past 10 years. So look at this revenue growth in the past year with a grain of salt. Now on to the reason why I said just ignore the very fact that this company was operating cash flow and free cash flow negative in financial year 22. So if we go to note 25 in the financial statements, which is the reconciliation of profit to net cash flow from operating activities, we understand why this company was operating cash flow and free cash flow negative in this year. And you also know, if you look at this note, that in financial year 21, this company had a profit of $2.3 million, but was operating cash flow positive by $20 million. So we can understand why this company has gone from a profit of $5.2 million to being operating cash flow negative by $1.1 million just by looking at this particular reconciliation. Now, when you look at this particular reconciliation or this note, the first things to look at are depreciation, amortization, other things at the top of this particular table. But they add back to profit. They increase the profit. So we want to see what has brought that profit down to negative 1.1 million. So we need to delve deeply into the changes in working capital, which is in the bottom half of this particular table. So we're looking at changes in inventory and changes in trade receivables and trade payables. Now, there hasn't been much change in inventories. So it all comes back to trade receivables and trade payables. And that's the reason why we saw a significant decrease in operating cash flow, because trade receivables went from being positive 8.4 million to negative 8.6 million. So that's an increase, and a significant increase in trade receivables. That means there's $8.6 million more coming to this company. Not only that, when you look at the decrease in payables, that means for some reason, they decided to pay some of the debt a little bit more quickly. There was actually a $2.654 million decrease in trade payables. Last year, there was actually a $6.7 million increase in trade payables. So that increase in trade receivables and that decrease in trade payables, which totals over $11 million, was the main reason this company was operating cash flow. And that, to be honest with you, that is nothing to be concerned about unless they don't receive most of that trade receivables. And more than likely, they would receive most of that trade receivables. So nothing to be concerned about for the fact that this company is operating cash flow and free cash flow negative. It's all in the changes in working capital. And operating cash flow can be quite lumpy. That's the word I was looking for. Lumpy for this company. This is the 10-year history of the operating cash flow. But for the majority of years, Gimli is operating cash flow positive. And some of the years, this company is highly operating cash flow positive. $33.2 million in 2020, $20 million in 2021, $13.7 million in 2012, $12.2 million in 2015. But there's some years here, 3 out of about 10 or 11, that they were negative, including $8.5 million negative in 2013. And the most recent year, financial year 22, they were also operating cash flow negative by $1.1 million. So when you do look at the history of the operating cash flow, this company does generate cash in their operations in most years. I've already mentioned that the majority of customers that this company sells their clothing to are US-based retailers. In fact, 80% of the revenue comes from the United States. About 19% of the rest of the revenue comes from Canada, and very small of their revenue comes from Europe, Japan, Singapore, Cambodia, Malaysia, and others. Maybe this company has aspirations to expand the selling of their clothing through the rest of the world, but I didn't see any of that mentioned throughout any of their presentations or anything like that. But again, the majority of the revenue comes from North America. Gimli is a dividend-paying company with a current yield of 6.4% based off their most recent dividend, which was 2.2 cents, which was paid on the 16th of January 2023, so almost 2 weeks ago from when I'm recording this video. So they've actually paid 3 dividends in their life. 2 in 2021, April and October of that year, missed dividends in 2022, and now they've paid their 3rd dividend in January 2023. And if we go back to February 2021, there was an increase in interest in this company. And the reason there was an increased interest in this company was because that's when they announced their very first dividend. And I probably should mention, based off the lack of a dividend in financial or calendar year 2022, I would not rely on this company maintaining their dividend moving forward. Now on to valuation metrics for Gimli, and these are some of the smallest valuation metrics I've ever seen. A PE ratio of 3.4, price to sales ratio of under 0.1. Because this company was not operating cash flow or free cash flow positive, there is no valuation metrics on those terms. But if we go back 1 year ago, when this company was operating cash flow positive by 20 million, was it 20 million or 10 million? I forget now. $20 million, I think it was. That means the price to operating cash flow at current markup is just over 1. But again, that operating cash flow is quite lumpy. Now, also did a reverse DCF based off the earnings per share because they have no operating cash flow or free cash flow in the current year. And for the future growth of this company to justify the current valuation, Gimli would have to contract, but have to decrease their earnings per share by 16.7% per year. So if you are confident that this company can keep on growing at slow rates, maintain their profit, also moving forward, this company would look cheap at current levels, because even if it goes backwards a little bit, this company is undervalued. Now to the daily chart for Gimli. And this particular daily chart goes back to 2011. And typically, if I show you a chart that goes back to 2011, I'm either going to show you a weekly or monthly chart. But because Gimli's shares are highly illiquid, there's not much trading, and because TradingView just ignores those days when a company shares aren't traded, they just sort of delete them from the system. That means I can show you the daily chart for this company going back to 2011. Now, the liquidity in this company has improved significantly over the past 2 years from February 2021. You can see that because I have divided this particular chart into 2 boxes. The first box shows you the trades or the daily trading from 2011 to 2021. So almost 10 years of trading in that first box. In the second box, we're just looking the last 2 years. So there has been an increase in trading, increase in interest in this company, and that increase in interest started in February 2021 when the company announced their very first dividend. And to be honest with you, the share price has been creeping higher ever since then. But a problem with the highly liquid company, even though the situation has improved for Gimli over the past 2 years, there are periods of time when there is no trading in this company. So this is the trade history for Gimli over the past 6 trading days, not trading days in terms of the ASX open, but the 6 last days where Gimli shares have been traded. So we're talking about the 21st of December, the 22nd of December, 23rd of December, 28th of December, and then nothing for almost 1 month. So no trades in this company from the 28th of December to 23rd of January. And then someone just became bored, really bored, because on the 23rd of January, shares in this company fell 35% on 26,000 shares traded. Shares went from 51 cents and closed at 33 cents. And then the next day, some people saw that big drop and thought there might be some value here. So we saw some more shares traded. So they're going to be, well, there is the potential, if you do take a position in this company, there's going to be long stretches of time when no shares in this company are traded at all. And if you need to sell your shares for whatever reason, you might have to sell your shares at a significant discount, like we saw on the 23rd of January. I plan to continue doing this series for a while yet, this Neppies analysis series, and the next 5 companies I'll be featuring are companies much more well-known than Gimli, including James Hardie, Lovisa, Codan, which is the next video I'll be doing, Kogan, and Cochlear. If you do have a suggestion of a company you'd like to see me feature in this series, just leave that suggestion in the comment section of this video, and I'll see what I'm able to do. Maybe I will do that video. Maybe you can inspire me. So instead of just leaving a name, tell me why you would like me to feature that company in this video series. That's all I have for this Neppies analysis video, looking at a little known company listed on the ASX called Gimli, ticker GLE, and they are known as GLG Corporation on the ASX. If you have any questions about this company, if you do have another company that's not very well known by ASX investors, just leave that company mentioned in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.